Let's talk about the banks for a moment, because the big banks are at a crossroads here with rates on the rise and a crucial decision from the Fed next week. Barclays' senior equity analyst Jason Goldberg, fresh off of their 20th annual Global Financial Services Conference, for some top takeaways on the state of the industry. Jason, what did you learn?
Yeah, no, we had 175 of the world's largest global financials, the top 25 U.S. banks there. And by and large, I hear about all this, talk of a recession weighing on the economy. But what they're seeing from their customer base is good. I mean, loans continue to grow. The banks are benefiting from higher interest rates and expanding net interest margins. And loan losses are at historic lows. And it doesn't sound like they're going up anytime soon. So I think the general takeaway was quite constructive.
But I guess the problem is the yield curve inverts even further, especially on a move like this week, as the market worries about the Fed going even harder to raise interest rates. And that doesn't bode well for the economy down the road, and certainly not for banks.
Yeah, no, certainly in the near term, they'll benefit from higher rates. I think given how they're entering this period of uncertainty, both the banks with record capital and strong liquidity, as well as both their consumer and corporate clients. Whereas, if loan losses do begin to rise, into 2023 and beyond, they're just well positioned to handle that, benefiting from both strong balance sheets and really record pre-provision net revenues.
So where do you want to be in the banking sector? It sounds like you find it all a little more optimistic than the market is telling us.
Yeah, particularly, if you look at where relative valuations are, you're trading at, call it 55% or so of the S&P 500. So valuations have come in quite a bit. Listen, I think some of the bigger banks, JP Morgan, Bank of America, were pretty constructive. Also, some of the regionals, Regions Financial stood out as giving particularly upbeat presentations.
What about you, Barb? Which of the banks do you like?
Well, I would stick with JP Morgan. That is the class act, and it's underperformed its peers. And I think the bad news or any of the worries about the bank are more than discounted in the stock. So I think that is one that I would focus on first.
Got it. Thank you very much, Jason. We appreciate you joining us.